All right, so we've got an important discussion for you all today, and it's actually thanks to the help of ProTax Accountant.
Hmm.
You know them, right?
Yep.
A really well-known accounting firm here in the UK.
Yep, they're fantastic.
So that's why we're able to bring this to you today.
Hmm.
And we're really zeroing in on something that I think is going to be pretty relevant for a lot of our UK taxpayers out there, especially, if you're self-employed or running a business.
For sure.
And that is how to pay HMRC in installments.
Yeah.
Because let's be real, sometimes those tax bills can be a bit of a whammy, right?
Yeah, a bit of a shock sometimes.
Especially when they all come at once.
It's true what they say about income and spending cycles not always quite matching up with when HMRC wants their cut.
Right. It's like you're going along swimmingly and then bam.
Big tax bill.
Right. And it could be a strain.
Absolutely, for individuals and businesses.
But the good news is
Yeah,
HMRC does have some ways to help you manage this.
they do.
And you can hardly spread out those payments.
Uh,
The main route for this is something called a time-to-pay arrangement,
right.
or TTP for short.
Yeah.
Basically, it's like an agreement where you pay what you owe in smaller bits.
Over a set time.
Yeah, over an agreed period.
It's a good system when it works.
Exactly. And that's what we're diving into today.
Breaking it all down.
So we can really understand all these options and how they work for us.
And it's important to remember that just because these arrangements exist,
Yeah.
it doesn't mean you'll automatically get one.
Right. It's not a free pass.
No.
Yeah.
You have to meet certain criteria and follow a process,
Makes sense.
which is what we're going to unpack today.
All right. So let's get into it then. Let's start with, who typically needs a time-to-pay arrangement?
Yeah.
What kind of situations lead someone down that road?
Well, we see all sorts of things, really.
Yeah.
For the self-employed folks out there, income can be up and down.
Right. Not consistent.
So you might have a really good month or quarter.
Yeah. Rake it in.
And then suddenly you've got a much bigger tax bill than you thought you would.
Ouch.
And it can cause a temporary cash flow problem.
Yeah. Just a bit of a bump in the road.
Another common one we see is problems with emergency tax codes.
Yeah. What's that all about?
So things like the W1M1 code.
W1M1.
It's because it doesn't take your total tax-free allowance into account for the year.
Right. So it's not cumulative.
Exactly. So you can end up paying way more tax than you should at the beginning of the tax year.
Right. That can really throw things off.
Oh, yeah. And then, of course, you've got businesses.
Yeah.
They've got their own challenges, right?
Right. Completely different ball game.
Cash flow going up and down is a big one.
Always unpredictable.
And then sometimes you get unexpected payroll mistakes.
Oh, that's a nightmare.
Leads to surprise tax liabilities.
So you're just minding your own business and then bam.
Right out of nowhere.
Those W1M1 situations, though, I feel like they catch so many people out.
You're telling me.
It's like suddenly you owe so much more than you were expecting.
Right? And it's stressful.
So if you do find yourself in one of these situations,
Yeah.
what is HMRC's general feeling about who qualifies for a time-to-pay arrangement?
Well, at the heart of it, they want to see that you've got a genuine reason why you can't pay the full tax bill right now
Right.
without it causing some serious financial hardship.
Makes sense. They don't want to cripple anyone.
Exactly. And they expect you to be proactive about it.
So don't bury your head in the sand.
No. As soon as you realize there might be an issue, you've got to get in touch.
Be upfront.
Yep. And you'll need to come up with a repayment plan that's realistic for your situation.
Right. Something you can actually stick to.
Exactly. And that lets you clear the debt in a reasonable amount of time.
Okay. So how long are we talking?
Usually between 3 and 12 months.
Oh, okay. So not too bad.
But sometimes you can get longer plans, though. They're less common.
Right. I guess it depends on the situation.
It does, and it definitely helps if you've got a good track record of paying your taxes on time in the past.
They like to see that you're reliable.
That builds trust.
Okay. So in terms of taxes themselves, what can individuals and businesses actually apply for under this time-to-pay arrangement?
So for individuals, it's usually available for income tax.
Okay.
Whether that's from your self-assessment or if you've overpaid through PayYE.
Okay.
Also national insurance contributions and student loan repayments.
Right. The ones that are collected through the tax system.
Yep. Those ones and businesses, they've got a wider range of options.
Okay. So what can they apply for?
Well, potentially VAT, value-added tax,
Mhm.
corporation tax, PayYE liabilities and payments due under the construction industry scheme, CIS.
Right. So pretty much all the big ones.
Yep. And fun fact, actually,
All the fun fact.
recent HMRC stats for 2023-2024
Okay.
showed that VAT and self-assessment debts
Mhm.
were the most common reasons people use time-to-pay arrangements.
Oh, interesting. So most people are struggling with those.
Seems like it.
Okay. So once someone decides they might need a time-to-pay arrangement,
Yeah.
what's the actual process?
Right. So there are two main ways to apply.
Okay. And it really depends on how much tax you owe.
Right. Okay.
So if the debt is 30,000 pounds or less,
Yep.
HMRC usually wants you to apply online.
Okay, through their website.
Yep, through their self-service portal.
Easy peasy.
But if you owe more than 30,000 pounds,
Okay.
you'll usually need to call HMRC directly.
Okay, and chat to someone.
Exactly.
All right, so if someone is eligible for the online route,
Mm-hmm.
what should they have ready before they start the application?
So for online applications, you'll need your government gateway login details.
Yep.
Essential stuff. And you'll need your UK bank account details too.
Right.
Because if they approve the plan, it'll be set up using direct debit.
Right. Makes sense.
And what about if the debt's larger and they have to make that phone call?
Yeah, what should they have ready for that?
Okay, so if you have to call HMRC,
Yeah.
being prepared will make things much smoother.
Always a good idea.
So you'll absolutely need the relevant tax reference number.
Okay.
For individuals, that's your unique taxpayer reference, or UTR.
And for businesses, it would be your VAT registration number or your corporation unique taxpayer reference.
Okay, so make sure you've got those to hand.
Definitely. And also have your UK bank account details ready
Right.
for setting up a direct debit over the phone.
Makes sense.
And be ready to talk about any previous tax payments you might have missed.
Right, so they can see the whole picture.
Yep. HMRC will also want a detailed breakdown of your current finances.
Okay, so what does that mean?
So like your income and essential outgoings,
Right.
or if it's your company's income and expenses,
Got it.
make sure you've got that all ready to go.
So be organized.
Exactly. And you should have a good idea of how much you can realistically repay each month
Okay.
and how often you want to make those payments.
Right, so have that all figured out beforehand.
It makes the conversation much easier.
They want to see you've really thought about it.
Absolutely.
Okay, so it sounds like they really want to get a good grasp of your financial situation.
They do. It's
Yeah.
important to them.
Are there any other specific things they might ask about, especially if it's about a company tax debt?
Yeah, so with company tax debts,
Mm-hmm.
HMRC will probably want you to explain how you'll repay the debt within a reasonable time frame
Oh,
and why your proposed repayment plan is actually realistic
right.
based on the company's finances and forecasts.
So they want to see that you have a plan.
Yep. And they might also expect the company to look at selling off any non-essential assets.
Oh, right. Like what kind of things?
Things like surplus stock or company vehicles, you know.
Things you don't absolutely need.
Exactly, just to reduce the debt as much as possible up front.
Okay, that makes sense.
And in some cases,
Yeah.
they might even ask company directors to put their own money into the business.
Wow, really?
Or to look into securing loans or extending credit terms with suppliers.
So they really scrutinize everything?
They want to make sure all avenues are explored.
Right, that it's a serious situation.
Yep. Okay, so let's say you've explored all of that
Mm-hmm.
and you're looking at the online payment plan options.
All right, let's talk specifics.
Are there different criteria or conditions for self-assessment, PAYE, and VAT?
Yeah, because I imagine those are all different beasts.
They are. And yes, you absolutely need to meet specific eligibility conditions to set up a time to pay arrangement online.
Okay.
And they do vary depending on which tax you're dealing with.
All right, so let's start with self-assessment.
Okay.
What are the conditions for setting up an online payment plan for that one?
All right. So for self-assessment, to be eligible for an online payment plan, you have to have already sent in your latest tax return.
Right, so you can't be behind on that.
Exactly. And the total amount of tax you owe needs to be 30,000 pounds or less.
Okay,
And you have to apply within 60 days of the payment deadline.
so there's a time limit.
There is, and you can't have any other HMRC payment plans or outstanding debts,
You got to be all square with them.
basically.
Okay, yeah, that makes sense. What about employers with outstanding PAYE contributions?
Okay, so for employers' payee, it's a bit different.
All right, how so?
You need to have missed the deadline for paying an employer pay-y bill.
Okay, so that one's a given.
Yep, and the total amount owed has to be 100,000 pounds or less.
Right.
Your proposed repayment plan needs to aim to clear the debt within the next 12 months.
Okay,
And any debts you include in the plan can't be older than 5 years.
so no ancient debts.
No, and just like with self-assessment, you can't have any other existing HMRC payment plans or debts.
Right, so same rule applies there.
Yep, and all your pay submissions and construction industry scheme returns, all the CIS returns,
Yep.
they've got to be up to date.
So everything has to be squeaky clean.
Pretty much.
Okay, and VAT, what are the rules for setting up a VAT payment plan online?
So for VAT, you have to have missed the deadline for paying a VA bill.
Okay.
And you need to owe £100,000 or less.
Okay, same as payee.
And the repayment plan has to be no longer than 12 months.
All right.
The debt also has to be for a VA accounting period that started in 2023 or later.
Okay, so it's for recent stuff.
Yep. And as before, you can't have any other existing HMRC payment plans or debts.
Right? We're seeing a pattern here.
Right. And all your VAT returns have to be filed.
Okay.
And this is important. You can't set up a VAT payment plan online if you use certain schemes.
Oh, right. Which ones?
So things like the cash accounting scheme, the annual accounting scheme, or if you make VAT payments on account.
Right. So if you're on any of those schemes, you're out of luck.
You'll have to go a different route.
Okay, that's good to know. So what if someone doesn't meet all those online criteria
Yeah.
or their debt is over the limit? What do they do then?
So if you're not eligible for an online payment plan,
Yeah.
or if your tax debt is over the limit for applying online,
Mm-hmm.
you absolutely have to contact HMRC directly.
Pick up the phone.
Yeah.
What kind of questions can they expect to be asked about their finances?
So when you call HMRC, they're going to want to understand your whole financial situation.
Yeah, get the full picture.
Exactly. And they'll probably start by asking if you can pay the whole tax bill right away.
Right off the bat?
Yep. And then they'll want to know how much you can realistically afford to repay every month.
Okay.
And if you have any other outstanding tax liabilities with them.
Right. So be prepared to answer all those questions.
Yeah, and you'll need to give them details about all your sources of income,
Okay.
your essential monthly expenses,
Mm-hmm.
and any savings or investments you have.
So everything's on the table.
It is, and it's worth knowing that if you have savings or assets that are easy to access,
Mm-hmm.
HMRC will generally expect you to use those to pay off as much of the debt as possible.
Okay.
Which makes sense, really.
Yeah, they want to see you're serious about reducing the debt.
Absolutely. Oh, and one more thing.
Yep.
If you've spoken to an independent debt advisor,
Okay, like who?
someone like Citizens Advice, for example,
Got it.
and they've made something called a standard financial statement,
Okay.
which shows your income and spending,
Right.
HMRC will usually accept that as evidence.
So it can speed things up.
It can.
That's really good to know about the standard financial statement.
Yeah. Definitely worth looking into.
Now, are there any other super important things that people need to know if they're thinking about a time to pay arrangement?
Yes, definitely. There are a few key points to keep in mind.
Okay, hit me with them.
First of all, even if you get a time to pay arrangement in place,
Mm-hmm.
you'll still be charged interest on the outstanding tax balance.
Oh, right. So it's not interest-free.
No, the current rate for late payments is 7.75%.
So that adds up.
It does. So you need to factor that into your calculations
Yeah.
and make sure the plan is actually affordable.
Good point.
Secondly, penalties for filing your tax return late might be paused once a TTP is agreed.
Oh, that's good.
But you usually have to talk to HMRC and make sure the plan is in place.
Right. So it's not automatic.
No.
You have to be proactive.
Exactly. And also remember, a time to pay arrangement only covers the specific tax debt you agreed it for.
Okay.
It won't automatically offset against any refunds you might be due.
Right.
Like if you overpaid PAYE, for example.
Okay.
You'll need to claim those refunds separately.
So it's not a one-size-fits-all solution.
No. And lastly, for our self-employed listeners,
Yeah.
HMRC has something called a budget payment plan.
Okay, what's that?
It lets you make regular payments,
Okay.
weekly or monthly,
Okay.
by direct debit towards your next self-assessment tax bill.
So you're spreading the cost in advance.
Exactly. It's a good way to stay on top of things.
Sounds good.
But to qualify, you have to be completely up to date with all your previous self-assessment payments.
Right. So no outstanding debts.
Exactly.
So that's a pretty thorough overview
Yeah.
of everything you need to know about paying HMRC in installments through these time to pay arrangements.
We've covered a lot of ground.
So just to recap, the main takeaway here is that HMRC does offer these arrangements
They do.
as a way to help you manage your tax bills when you can't pay the whole thing all at once.
Yep.
But it's super important to remember that the specific requirements
Absolutely.
and the application process
Yeah.
will depend on what type of tax you owe and how much you.
Every situation is different.
It is. So it's always best to look at your own finances carefully
Definitely.
and contact HMRC as soon as possible.
As soon as you think there might be a problem.
Right. Be proactive.
Exactly, because the earlier you act,
Mm-hmm.
the more options you'll likely have.
Makes sense. And for anyone listening who thinks they could use some expert advice
Yeah.
on navigating these HMRC installment options,
Yeah.
we highly recommend reaching out to the team at ProTax Accountant.
Great suggestion.
They really know their stuff when it comes to HMRC.
Oh, yeah, they're experts.
And they can give you tailored advice.
based on your specific situation.
Exactly.
Hmm.
So thank you for listening.
Yeah, thanks for having me.
We hope this has helped to clear up any confusion
Fingers crossed.
about how you can potentially pay HMRC in installments.
It's a complicated topic.
It is. But hopefully we've broken it down for you.
Hopefully.
All right, thanks again, everyone,
Cheers.
and we'll see you next time.
Sounds good.